Today we'll be talking about another potentially undervalued stock listed on the London Stock Exchange. We'll talk about the business model, changes in consumer habits, the business fundamentals, and then my personal view on the stock. And the stock in question is called DIAGEO. I've actually been thinking for some time about investing in DIAGEO myself, but it was this comment left under my legal and general stock video that pushed me really to research DIAGEO. So thank you very much for this comment, and if anybody else wants me to research a stock, just leave a comment under this video. Now, what you can see on the right-hand side is Diageo is currently trading at around £34.74 per share. But what you can see on the left-hand side is at the start of 2023, it was trading at around £36 per share. So the year to date, it's currently down around 3.83%. So it's underperforming the S&P 500 and also underperforming the All World Index Fund, VWRL. So we're going to look at why this might be and discuss the business fundamentals of Diageo as well. So in terms of the business model, it's very simple. What they aim to do is build up a brand of premium drinks across the world through innovation, brand building, and relationships with trade, with the aim of being the experts in distillation and brewing. And what you can see here in the centre is just a few brands which fall under the Diageo name, including brands such as Baileys and Guinness. So in terms of the strategy of Diageo, this as well is quite simple in that the fact that they want to be one of the best performing, most trusted and respected consumer companies in the world through things like efficient growth, consistent value creation, credibility and trust, and engaging people. Now, to achieve this, Diageo have these 6 key activities, including consumer insights, marketing, distilling and brewing, sourcing, innovation, and selling. And when you look further into these activities, they can be really condensed into these key metrics. So they've got over 27,000 employees across 180 countries, 132 production sites, and Diageo is actually made up of over 200 premium drink brands. So it's a massive company. Most people haven't heard of the Diageo name, but you will have heard of the brands which make up Diageo. Now, in terms of the global presence, you can see that they've got a large footprint across the world in North America, Europe, Africa, Latin America and the Caribbean, Asia, and also in global travel. So in North America, they've got over 2,600 employees and 12 production sites. Europe, they've got a huge number of employees, over 10,000, and they actually exported 27 million cases of spirits. In Africa, their sales are growing quite big, which we're going to go into later on in the video. 11% in net sales generated in Africa in terms of the total revenue last year, and they use 80% sourced ingredients from local industries and suppliers. In Latin America and the Caribbean, they've got over 3,000 employees and 12 production sites. In Asia, 1,800 employees and 14% reported growth. So really their 2 growth areas here are Africa and Asia, but also we'll look at Latin America as well. And they're massive in global travel. So they've got the number 1 whiskey brand and the number 1 liqueur brand in travel retail. And what you can see on the left-hand side there is just one of their shops that they might have in an airport, for example, where they sell some of their premium brands. Now, in terms of the recent milestones of Diageo, they've achieved quite a lot in the last kind of 20 to 25 years. So in the year 2000, they owned Burger King and some other food assets, but they actually sold these to focus on the premium drinks industry. They've acquired a few companies since then. So they've acquired United Spirits, India's leading spirits business. They partnered with Distill Ventures, and this is really big because it actually offers cash investment to entrepreneurs developing brands. So think of this like Dragon's Den or Shark Tank. They can actually invest in people who are creating new premium drinks from the get-go and get a stake in them companies. They've got Casamigos, the fastest growing tequila in the US. They've also increased stakes in some of the Chinese companies. I won't try and pronounce that name. They plan to invest over $500 million in Mexico for expanding their tequila manufacturing. They've acquired Chase Distillery, and they're actually breaking ground on the first carbon neutral whiskey distillery, which is located in Kentucky. So you can see that they're always developing and always investing around the world to kind of get a grasp on this premium drinks market and improve sales. In terms of UK drinking habits, at face value, this looks quite bad because there was a paper published in BMC Public Health which investigated the growing trend of non-drinking among young people. And what you can see in the top left, this is all individuals from all age groups. And you can see from 1998 to 2009, there was an increase in the number of people who didn't drink alcoholic beverages at all. And that increased to 2013 as well at 21%. But quite frightening for companies like Diageo is that this trend was increasing to a much greater rate in young people aged 16 to 24. So the amount of people who weren't drinking any alcohol beverages increased from 18% to 29% from 2005 to 2015. But the website Alcoholic Change UK, or Alcohol Change UK, makes a very good statement that there's no reason to think that drinking behaviours are fixed or unchanging. They move in response to shifts in social attitudes, marketing, and legislation. So, one of the reasons I think young people are staying away from alcohol is the increase in social media and kind of the gym culture that's involved in young people and non drinking. So, that's one of the reasons why I think it might be happening. But what you can see here is in the UK drinking habits from the same website, it states that higher earners are more likely to drink than those on lower incomes. And of course, Diageo is in the premiums drinks business where the higher earners are. And so they're more likely to drink Diageo products than just standard beers, for example. So this is quite reassuring for Diageo. Now, in terms of premium drink statistics, what we'll look at here is whiskey. And what you can see is in the UK, there's 9 million whiskey drinkers, and 2.4 million of these people report to drink whiskey every week. However, when you look at the total consumption, this dropped from 49.1 million litres in 2021, which is a 4% drop compared to 2020, and a 13% drop compared to 2019. Having said that, this was when the COVID lockdowns were happening, and over 97% of whiskey sales are offline. So if people are at home just online, it's going to obviously affect their whiskey sales. But what you can see is that the from 2022 onwards, you can see that brandy, gin, liqueurs, rum, and whiskey, which Diageo are involved with, are all looking to increase in terms of the revenue in millions. So this is quite reassuring again for Diageo. And again, in terms of the global statistics, you can see this increase in sales in terms of brandy, gin, rum, vodka, whiskey, and liqueurs from 2022 onwards, going all the way up to kind of the late 2020s, so 2028, 2029, 2030. And you can see this in percentage terms as well. So if you look at this, this is a percentage increase in the sales of brandy, gin, liqueurs, rum, vodka, and whiskey. And you can see from 2023 onwards, you can see there's an average 5% increase or slightly more in terms of the sales of brandy, gin, rum, vodka, and whiskey, and liqueurs again. So all of this, again, is quite reassuring for Diageo, who sell all of these products, because they're looking to get kind of an increase of around 5% per year in terms of revenue on all of these premium drinks. However, as I mentioned before, when people were in lockdown in 2020 and 2021, where people weren't buying premium drinks because normally these are bought outside of the home, you can see that the statistics are changing and more people now are starting to increase the amount of premium drinks which they buy online. So Diageo really need to grasp this market because from 2025 onwards, it seems that around 10% of the sales will come from online sales. But I have no doubt that Diageo know about this and will kind of try and grasp this market of the online sales going forward. So that's the Diageo background and also the statistics around drinking. But now in terms of the business fundamentals, Diageo themselves. And what you can see here is Diageo currently have a PE ratio of around 22.4, which is high, which suggests that the current stock may be slightly overvalued. But you can see that they've got a dividend yield of 2.19%. And from 2006 all the way up to 2022, they're increasing their dividends year on year by around 5%. So if you're looking for a good dividend stock that's got a strong history and they're increasing the dividend constantly across the years, this might be a stock that you're interested in where you can reinvest that dividend back into the stock or to other stocks to build up a dividend portfolio. And this is from Diageo themselves, from their CEO, who did a webinar to discuss some of their dividends and business fundamentals. And you can see again in the bottom left that the interim and final dividend are increasing every year by around 5%. And they're actually doing a return of capital through share buybacks and are looking to return about £500 million to shareholders by the end of 2023. So again, this is quite reassuring for someone that's trying to build up a dividend portfolio. Now, as I said before, when you've got Latin America down in the bottom left, you've got Africa, you've got Asia, Europe, and the North Americas, you can see that the sales are increasing rapidly in Asia and Latin America compared to Africa, North America, and Europe. So again, these are these emerging markets which Diageo should be able to delve into and kind of grasp, but they've got net sales growth around 9.4%. So this is really strong for Diageo going forward, and if they can grasp these markets in terms of the premium drink industry, they should be able to generate high profits. And in terms of the business fundamentals even more, you can see that organic volume, organic net sales, operating margin are all increasing. The cash flow decreased slightly, but that can always decrease through things like acquisitions and investments into production sites. But you can see again, this is all strong in terms of the fundamentals behind the business. Now, if we delve deeper into this and look at their net income, you can see that it dropped down in 2020 and 2021 compared to 2019, but it's increasing again. And remember, these are reported in thousands. So that 1 million you can see is actually 1 billion, the 2 million is actually 2 billion. So the net income is actually over 3 billion across the world. And you can see that earnings per share on the right-hand side are increasing as well. So this is all going in the right direction. Their total assets are increasing as well as their total liabilities, but their ratio of assets to liabilities is going in the right direction as well, which is up. In other words, you can say that their assets are stripping their liabilities, so their money which they're generating or their assets which they've got exceed their liabilities, such as debt. So if they were having to pay this debt, they've got the assets to cover it. So that's all going in the right direction. Now, some negative news is I think that this stock is potentially overvalued. So they've got a current assets to current liabilities of 1.53, which is very strong, and a net income growth of 22.14%, which is very strong. However, the PEGI ratio, which I mentioned in my last video, if it's below 1, it suggests that the stock is undervalued, and if it's over 1, it suggests that the stock is overvalued. And DIAGEO currently has a PEGI ratio of 9.29. So, although you've got all these strong business fundamentals, I believe that these are already priced into Diageo's stock price, and it might not be the best buy at the moment. Of course, this is my own opinion, and you can do your own research into this, but I think that the stock should be trading at around £30 to £32 per share, whereas it's currently over £34 share. Having said that, as we discussed with the dividend section, if you're looking at a stock that can produce a strong, stable dividend, which you're able to reinvest to build a dividend portfolio, this stock might be worthwhile getting, but I just wouldn't invest a lot of money into it at the moment at its current stock price. But I might potentially buy a few shares so it can generate that dividend income to reinvest elsewhere. So that's my personal opinion on Diageo, looking at the business fundamentals, etc. If you've got a different opinion, please leave it in the comment below, and I'll see you at the next video. Thank you.